Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by DSM Nutrition. Are your cattle vitamin D deficient? Fluctuation in levels of the sunshine vitamin can affect herd health, performance, and profitability. Improve your herd's vitamin D status with High D from DSM Nutrition. Visit dsm.com/hy-d to learn more. Current data from the Bureau of Economic Analysis shows U.S. gross domestic product totaled $27.6 trillion in the third quarter. Compared to 2022, third quarter U.S. economic output was roughly 3% higher than a year ago. Quarter over quarter, consumer spending was booming, increasing roughly 4.8% for goods and 3.6% for services. Private investment and government spending were both higher, but it's the consumer which contributed the most value in the third quarter. On average, U.S. disposable income growth continues to outpace official inflation statistics, with third quarter real disposable incomes averaging up 3.2% in the last 3 months of data. Job growth and wage growth were surely solid in Q3, but consumer spending was shown increasing by an even wider margin. This relationship caused a big drop in personal savings rates from 8.9% in Q2 down to 6.6%. Amounts held in personal savings fell roughly 25% in the third quarter, or a decline of $264 billion. At the same time, U.S. credit card debt increased $22 billion, or 2.2%, in order to keep the consumer spending and the economy grinding higher. With an annualized growth rate at 4.9%, the third quarter GDP figures came in above most industry expectations, but it was worth noting growth was half a percentage point below the GDP Now estimates. Published by the Atlanta Federal Reserve Bank, the GDP Now estimate is a real-time GDP forecast based on currently available economic data from the current quarter. With not yet a full month of data for the fourth quarter 2023, GDP Now forecast for the fourth quarter suggests growth at 2.3%. Average forecast error since 2011 is within 0.3 percentage points, making the GDP Now forecast a historically reliable tool for predicting economic growth. This means current projections place fourth quarter GDP growth somewhere between 2 and 2.6% higher. This pace of growth should not instigate further rate hikes from the Federal Reserve unless inflation rates return to a stubbornly high level. Thanks for watching. Remember to visit CattleFax.com to become a member or see the latest market news and analysis.